The Beef Market Update with Ann Dunford on RealAgriculture.com is brought to you by Haney Farms. Do you need seed? Find us at haneyfarms.com. So, Ann, we've had the cattle on feed reports in Canada, and we've also had the U.S. one last Friday. Any sort of trends developing or any surprises?
Well, no surprises for sure. I mean, the official definition of Friday's U.S. report was neutral, so it came in pretty much on target. But bottom line is, and the market's been attempting to react to this and predict this for some time now, but on-feed numbers on March 1 still up 3% in the U.S., and of course, placements during the month of February were above a year ago. And we had quite a few signals that that was what was going to be the case. So we've still got this situation where we've got ample supplies in front of us. And now, of course, the market is anticipating that or attempting to anticipate that on the futures market.
Too much supply for demand this summer?
Well, that most certainly adequate. And I guess, remember last year the U.S. was most certainly in a very bullish export market. And that was one of the key reasons for this in the U.S. fat cattle market in 2011. And, of course, exports have been slower this year. And I know we're just, into March, but the year has started off at a slower pace. The whole global slow recovery in the economic side of the equation is just not really meant some very brisk exports. And so, again, this year is not shaping up exactly like last year so far from an export perspective.
That's got to be somewhat concerning to the U.S.
I think it is. Now, I do think as we kind of watch the forecasts, they're suggesting the first half of the year off a little bit from last year, but they're still wanting to remain fairly friendly towards the latter part of 2012. So again, if that's out there and there's some reasons around that, i.e. some further trade reopenings is what that's based on. But again, how it unfolds and whether it's further delayed into 2013 could be a negative factor on this marketplace a little longer than people want to think.
So I guess when we get through summer here, we could be possibly looking forward to fall, the way it's shaping up. we're not even into summer yet, and we're already talking about can't wait till fall.
Well, and this might be the kind of year where so far we've seen, in my view anyways, an early spring high on this market. And the market looks like it's going to saunter into summer lower, and that's pretty seasonally normal. But this one could be a year where we kind of slumber along at lower levels a little longer than we were hoping for. And part of that, Sean, is because we've got ample supplies, not just numbers, but our carcass weights are running high in both the U.S. and Canada. It's been very mild winter, great winter to feed cattle, but the other side of that is, of course, we've got heavier carcass weights and more tonnage coming to town.
Calving season is underway. Both sides of the border going well. It has to be going well so far with the weather we've had.
Oh, I don't think you've got anybody complaining. Well, maybe there is, but generally speaking, especially in Western Canada, compared to the situation many were in compared to this time last year, they're quite happy with the situation so far. And again, when you're calving cows out with current price levels for calves on the ground, it's just the whole optimism and the whole attitude, I think, is a whole bunch different and better than it has been.
It's a little easier to get up in the morning or in the middle of the night when you got good prices.
Exactly. And again, that part of the coin doesn't look like it's going to change. We've talked about that for a while. The supply side, we've sold this herd off for, 6 going on 7 years. And so the supply side is becoming pretty obvious. The question is on the other side of the equation, how does the feedlot and the packer manage this tighter supply at any kind of expectation of profits?
And so how do they manage for any expectation of profit?
Well, there's been some good opportunities, Sean, all winter long. We've had some great, the futures market has given us several opportunities to be hedging cattle or forward contracting, or at least laying off risk one way or the other. Now, that's changed a lot in the last 3 or 4 weeks. And so you've got a feeder market that is coming off its highs a wee bit, but the fat market's come off its highs a lot, especially going into the summer from a futures market perspective. So there's going to most certainly be some break-evens higher than what this market, in my opinion, is going to be come summertime.
Something we haven't talked about for a while is CPIP. Does that work right now?
Well, again, there was some opportunities earlier on. kind of for May and June, but those were back at the beginning of the year. So yes, there most certainly were options or available levels that producers could look at from CPEP perspective. And on the other side of the coin, you've got a situation where, depending on what your level of contentment is with say a CPEP premium, there are always levels. Don't forget, that's always there every day of the week. If you're an Alberta producer, take a look at it. You should be watching those all the time.
So what did this Alberta-Saskatchewan cattle and feed report tell us then?
Well, it was very similar. February placements in the U.S. were up 3%. That was the exact percentage increase for Alberta and Saskatchewan as far as February 2012 over 2011. So we continued to see feeder cattle make their way into feedlots. That was a period in time here in Western Canada where you could still lay off that risk, like we talked about a second ago. So we saw some pretty aggressive placements. And now here in March, of course, we won't get this data out till next month, but it does look like we've had a pretty busy month again for March. It's often one of the busier months, and of course it often tends to see some price pressure on feeder cattle. So that's what we're seeing today. Nothing out of the ordinary. This is very much a seasonal feeder market, it looks like to me.
So really no reason for any sort of shock or surprise?
No, I think, you're going through some numbers right now. We go into the summertime, of course, assuming that moisture conditions are good. Feeder cattle movement's going to dry up significantly. This really won't be a big discussion point for a little while. We're going to see placements drop off pretty substantially as we head into May and June.
Well, I know talking to a lot of the feeders in my area here, and you just look around, the pens are in fantastic shape.
They should be in fantastic shape. And according to the on-feed report, March 1, Alberta and Saskatchewan numbers were actually up 1% from last year. So I suspect they're in good shape, and they've got more cattle in them than last year.
Okay, Ann, thanks a lot, and we will talk again soon.
Okay, thanks, Sean.